Why you need to invest young. Time is your biggest asset. Investing young is the best thing you can do for your future self. In the investment world, time is your biggest asset. But don't just take my word on it, listen to these mind blowing statistics. If you invested $200 a month at the age of 20 with an average of 8% in the S&P 500, which is very, very modest and achievable, by age 60, you will have over 600K. But if you wait until you're 30 to start the same $200 a month investing, it will only grow to 275K when you're 60. The difference isn't money, it's time. As you guys can see here from this graph, a starting age at 20 and a starting age at 30, the difference is a big, big, big gap. The craziest part of the statistics is that in the 40 years from age 20 to 60 that you're investing $200 a month, in the end of the 40 years, you would only have put in a total of 96K, while your value would be over 600K. That's compound interest turning into exponential growth and giving you a 5 times return. Now you're probably wondering, what exactly is compound interest and what is exponential growth? Compound interest is when the returns you earn on an investment don't just sit there, they get reinvested. So you start earning returns on both your original money and the profits. Over time, this creates a snowball effect where your money grows at an accelerated rate. Exponential growth is a mathematical pattern where sometimes things increase slowly at first, but as time goes on, the rate of growth speeds up dramatically. In the investment world, the longer your money stays compounding, the sharper and faster the growth becomes in the later years. So compound interest makes something exponentially grow. This is my favorite example of compound interest and exponential growth. If we can see here, this is a chart of the market over the past 100 years, and we can see that there's a lot of major economic events in there, like Great Depression, we have Black Monday. We had lots of recessions in this time, but as you guys can see, since the market exponentially grows, it really blows past those. So if you look at it in perspective and take a step back, those drops back then are really nothing to where we are now. My theory of investing young in time is your best asset works in every single type of investment. There is many types of investment, not just the traditional stocks and bonds and mutual funds that people buy. Here is a list of many options. But I just want to let you guys know that this information is applicable to any single type of investment in your life. And then it brings me to my next point. One of my favorite quotes is time in the market beats timing the market. What this means basically is most people waste their energy trying to predict the perfect moment to buy or sell, but the real secret is just staying invested and letting compound growth do the work. The longer your money is in the market, the more powerful that compounding becomes. Even the best traders in the world, like Warren Buffett, will tell you it's not about making the perfect entry, it's about giving your money enough time to grow. So stop waiting for the perfect moment. The best time to start was yesterday, and the second best time is today. The stock market, real estate, crypto, it's all about time. Starting early gives your money the chance to compound. You don't need to start with a large amount of money. Even small amounts will explode if you just give them the time. And then another reason that you guys need to start investing young is because inflation is your silent enemy. If you are leaving cash in the bank, inflation eats it alive. You may feel like it's safe, but your money's actually losing value every year. Investing helps protect your money and grow it beyond inflation. There's many ways you can invest. Even a high yield savings account is investing. So make sure if you have cash in an account, a substantial amount, you don't leave it in there. You need to go put it in a high yield savings account because you are losing money if you have cash just sitting in an account. Every year, inflation eats away your cash like rust on metal. So if your money isn't growing, it's shrinking. That's why investing isn't just about getting rich. It's about protecting your money from losing value. Too many people look at investing like it's some get rich quick scheme, and that's the wrong mindset. The truth is, investing isn't designed to make you rich. It's meant to set you up for the future. It's about building long-term wealth so when you hit retirement, you're not stressed. It's about creating security for you, your family, and your kids one day. The people who win with investing are the ones who think 10, 20 to 30 years ahead, not the ones that are trying to double their money next week. The real money comes from time, not greed. So stay consistent, be patient, and let compound growth do the heavy lifting. Chasing quick flips is how most people lose. Investing rewards the long game. This was Net Trades, and I hope you guys enjoyed this video. Peace.